Good morning. Thank you for joining us today for the webinar Finding Success During Lockdown. Hi, my name is James Eady and I'm the Victorian Sales Manager across new developments. Joining us today is Cam Kusher, our Executive Manager of Economic Research here at REA Group. Cameron is widely sought after commentator and presenter on property market conditions and emerging trends, and today he will share an update on the Victorian property market and unpack the impact of lockdowns and the new home sector and provide insight into what the future holds. We're also joined today by Fergus Humphreys, Sales and Marketing Director at Hampton, and Ashley Bromwich, the Sales and Marketing Director at Pace Development Group, to share their own insights around what we can learn from these lockdowns and their strategies for success during these challenging times we face. If you have any questions throughout the presentation for Cameron, Fergus or Ash, please feel free to use the question and answer chat function at the bottom of your screen. And we'll endeavour to answer these questions towards the end during our question and answer segment. But for now, it's over to you, Cameron.
Thanks, James. Thanks, everyone, for coming. I can't share my screen yet. Now I can. So let's jump into it. I'm going to run through what's happening in the Victorian housing market at the moment. Let me just put this onto presenter mode. There we go. So what's the current state of the market? Obviously, Victoria's in lockdown at the moment, but even in parts of the country where lockdowns aren't in place, and even before Victoria went into lockdown, a lot of people were still working from home, and that meant they were spending less time in the office. And this is something I think we're going to continue to see post-restrictions and post-lockdowns. If we look historically, the people that were given the flexibility to work from home tended to be more senior people in businesses, but now there is going to be an expectation that all employees have a level of flexibility as to when they are and aren't into the office. In terms of lockdowns, they're having a big impact on the market. One thing we're really seeing, though, is that the impact in New South Wales, where you can still do one-on-one inspections of property, is nowhere near as severe as the impact in Victoria, where one-on-one inspections are banned. And longer term, that is going to have an impact both from the property market's perspective, but also economically. But generally speaking, when we talk about the established housing market, lockdowns are impacting on the preparedness of vendors to list their properties. Even a one-on-one inspection is obviously not ideal, but being not able to inspect at all is really discouraging vendors from bringing properties to the market, which is a challenge because the demand for properties we're seeing at the moment is still at very high levels on a historic basis. It's not quite as high as it was at the peak last year or even the peak earlier this year, but we're still talking about demand for properties only about 8% off its historic highs. Property prices, they've been increasing rapidly because of the heightened demand, because of low borrowing costs, because of restrictions on how people can spend their money, and because of the lack of supply of stock available for sale. Transaction volumes, even though lockdowns are impacting on sales now, they're still much higher than they were both in 2019 and 2020. Mortgage costs, they are at record low levels and they're expected to remain at record lows until 2024, according to the Reserve Bank. But we are starting to see some increases in longer term fixed rates. But the likelihood that borrowing costs are going to be low for some time, and even when interest rates start to climb, that is likely to be a slow and steady move. That is giving borrowers confidence to get into the market now. In terms of the new homes market, home builder clearly led to a surge in demand, particularly for vacant land. And there was this, certainly from my perspective, I thought that we would see a pullback in demand post home builder. But if we look at the August data in terms of inquiry across the nation, the volume of inquiry was the highest it's ever been. And I think what we're actually starting to see in this market is people can't find what they want in the established housing market because there's a real lack of supply of stock available for sale, that they're now looking to the new homes market and saying, well, if I can't find what I need, let's go and get a piece of land, let's go and build a brand new house, or let's go and buy that off the plan apartment and get exactly what we're after, rather than maybe having to sacrifice on a few things in the established market. In terms of where the demand's coming from, first home buyer demand was very strong. It started to wane. Upgraders are particularly strong at the moment, and demand from investors is really ramping up quite a lot. And in terms of the rental market, there's still a lot of challenges in the inner city apartment markets, but we are seeing a lot of rental demand moving to suburban houses and regional areas. And that's also where we're starting to see investors coming back into the market. So let's have a look at some of the data. So in terms of lending, we're seeing a record high value of lending each month, 49.3 billion in July. And you can see in terms of new lending, how that's comprised. So first home buyer lending was higher than investors for most of the last 18 months. It started to fall whilst we've seen an acceleration in lending to investors. And you can see that there in the black. And obviously subsequent buyers are the biggest share of the market at the moment, using those low interest rates, using that jump in prices to upgrade into nicer houses in better locations than what they were in previously. And you can see that playing out across all of the states. So if we look at Victoria, upgraders, certainly there's about 5 billion a month spent by upgraders at the moment. First home buyer lending has pulled back over the last 3 or 4 months. And there was a slight downturn in investor lending in July, but still significantly higher than it was 12 months ago. The real change for Victoria and particularly Melbourne has been since COVID hit. If we look at internal migration, so clearly overseas migration is a challenge for Melbourne, but you're also seeing fewer people from the rest of Australia moving to Melbourne, and obviously some Melbourneites moving out of Melbourne into regional Victoria or other parts of the country as well. So net arrivals into Melbourne have really plummeted. We're looking at about a net loss of around 8,000 people a quarter from Melbourne. Some of those are going into regional Victoria, but also a lot of them are floating into other parts of the country, whether that be southeast Queensland, Adelaide, or Perth, and that does have an impact on demand for housing as well. So let's take a look at what's happening with sales. So nationally, you can see that sales volumes peaked the week before Easter, and they're pretty steady for a number of months, but since lockdowns hit, they've started to drift lower. Despite the fact that sales volumes are now falling, in Melbourne, there's been 77% more sales so far this year than there was at the same period last year. In regional Victoria, it's 31.5% more sales so far this year. But if we look, as I mentioned earlier, the impact of not allowing people to have one-on-one inspections. In New South Wales, if we look at our weekly count of sales, it looks like people are just getting on with things because they know lockdowns are going to be here for a while. They can still go and inspect the property if they really want it. Whereas in Victoria, you can't have that one-on-one inspection. And the government's saying even when the rules change, it will have to be a completely empty property to get that inspection. And that's just, people are just saying, well, it's too hard to transact on a property at the moment. We continue to see that decline week on week in the number of sales. If we have a look across the regions of Victoria in terms of where sales are happening in the year-on-year change, so the black, you'll see a number of charts like this. The black is Melbourne, the red is regional Victoria. You can see the biggest increase in sales year-on-year is in the inner east. Sales have more than doubled there. You can also see big increases in the western suburbs and right across Melbourne. That speaks more to the impact of lockdowns last year necessarily than how strong sales are at the moment. In regional Victoria, you can see that Ballarat's seen the biggest year-on-year jump in prices, whereas in terms of the volume of sales, it's Melbourne's west, Melbourne's southeast, and Latrobe Gippsland, which have seen the most sales. In terms of price growth, you can see that Melbourne's actually been one of the more sluggish markets. It's really unusual to see double-digit price growth across all regions of the country, but that's what we've seen over the last year. Lockdowns have probably hampered Melbourne's performance somewhat, and you can see that price growth over the past 12 months in regional Victoria has been exactly double the rate of price growth we've seen in Melbourne. And you can also see the push to regional areas. So in every state and territory except for Northern Territory, prices in regional markets have grown at a stronger clip over the last 12 months than capital city prices have grown. And if we have a look at what that looks like across Victoria, so you'll notice, on the right, that should be Victoria region unit prices. Got that mislabeled. So Shepparton, we don't have enough data to produce price growth for units, but generally speaking, you can see that in every market, I think it is, the rate of growth in prices for houses has outstripped the rate of growth in prices for units. And it's really stark in areas like in Melbourne. You can see 13.6% jump in house prices compared to only a 0.7% rise for units. And you can see similar stories, particularly in those inner areas, inner east as well is another really good example of that. And in regional markets, the unit markets have been doing better. But again, generally, house prices have grown at a faster clip over the last 12 months. Now, turning to listings and the supply of stock for sale. So if you look here in terms of the number of monthly new listings, you can see again that lockdowns are really hampering the confidence of vendors to put properties on the market. Now, that's not necessarily a bad thing for new homes, because if nothing new is coming onto the market in the established market, and basically people can't inspect properties, I think that's actually a real advantage for new homes, because the sale process for a new home is that you're selling something that doesn't exist. You can't, apart from obviously going into a display home, but you can't look, feel and touch what it's going to be. It's a bit more of an imagination process about what this property is going to be when it comes to life. And I think, not that we would wish lockdowns on anyone, but lockdown can actually be a bit more of a positive for the new homes market, certainly more so than it can be for the established market. Interestingly, again, in Sydney, where you can still have those one-on-one inspections, there was an 8% increase in new listings in August in Sydney. So again, just that slight difference in the rules around inspecting properties seems to be making a pretty sizable difference in the behaviour of vendors in those markets. Now, it's not all bad news. There were 200% more new listings in Melbourne in August this year compared to August last year. So I think, again, that does talk to the fact that, yes, Victoria's in a lockdown again, but again, in some, it's not responding like Sydney is, but in some respects, people are just getting on with life a little bit, realising that, A, hopefully this is the last lockdown, but B, things like virtual inspections and online auctions can work, and people are more prepared to adapt to selling in that process than they were maybe 12, 18 months ago. If we look at total supply of stock on the market, this is where we've seen really big declines, particularly in regional parts of the country. So regional Victoria, there's 37% fewer properties than there were 12 months ago. And you can see that total listings are the lowest they've ever been. Well, there's actually slightly more properties on the market now in Melbourne than there was a year ago, up 4.2%. But again, over the last couple of months, you can see that's trending lower. And I think, again, this talks to the fact that nothing new is coming on. So people are going back and looking at those properties that maybe they discounted in the past and trying to convince themselves that maybe it's going to work for them and looking to purchase those properties. Again, the alternative is to go to the new homes market and get something which is exactly what we want. So let's take a look at how that looks in terms of the year-on-year change for both new and total listings across Melbourne and regional Victoria. So you can see in Melbourne, lockdown last year, lockdown this year, a lot more new stock is coming to the market this year during lockdown than last year, but we're still talking very low volumes. In regional Victoria, each area of regional Victoria saw an increase in new listings in August. But in terms of total listings, it's really mixed. So you can see that there's a lot more stock on the market in the Melbourne Inner, Melbourne Inner East and Melbourne Inner South. And I think that really speaks to the overhang of apartment stock that is on the market in that region. Whereas the other parts of Melbourne, you can see that the amount of stock for sale has declined. In regional Victoria, you can see some really big drops in total supply of stock on the market. Down 44% in Geelong, 44% in Warrnambool and Southwest, and pretty large falls across the rest of the regions as well. One of the other metrics that's really good to have a look at is what's happening with the median days on site. And you can see here that in Melbourne, so a year ago, property typically took about 43 days from when it was first listed to when it was sold on our website. That's fallen to 37 days. But look at the shift in regional Victoria. So in regional Victoria a year ago, it was typically taking 70 days to sell a property. That's fallen to 41 days. So it's not that much longer than how long it takes to sell a property at the moment in Melbourne. And again, just really speaking to that shift out of Melbourne and into regional parts of the country or regional parts of Victoria. Again, it's a trend you can see prevalent right across the board. So you see regional New South Wales, a big decline in days on site there. Look at regional South Australia and regional Western Australia. It's still taking a very long time to sell a property, upwards of 90 days. But in regional South Australia, it was taking almost 200 days a year ago. In regional Western Australia, it was taking almost 170 days a year ago. So let's jump into what that looks like across the different parts of Victoria. So the market where properties are selling quickest at the moment is the Mornington Peninsula. And in terms of Melbourne, it's also seen the biggest decline in days on site over the year. Days on site has fallen by 33.3%. So, all of our metrics are basically showing Mornington Peninsula up as being one of the strongest markets in Melbourne, if not the country. The other areas where we're seeing some big declines in days on site, the southeast, the western suburbs. Again, some very different, a bit of a different story in the inner suburbs. You can see Melbourne inner days on site's up 26.7%, the inner east it's up 3%, and inner south it's up 17.9%. But again, the real mover, pardon me, has been regional areas. So Mornington Peninsula is the fastest selling market in Melbourne. Geelong is taking as long to sell as Mornington Peninsula is. So I think that really speaks to the shift. I know Mornington Peninsula is technically in Melbourne, but that shift to the outskirts of Melbourne and into those regional areas, people looking for lifestyle, and those areas become a lot more livable if you maybe only have to commute back to the office 1 or 2 days a week, as opposed to having to commute back into the city 4 or 5 days a week, like people used to have to before COVID. So Geelong, property selling very quickly there. Ballarat, only 36 days. That's a faster rate of sale than a lot of other areas in Melbourne as well. And you can see right across the board, except for maybe Shepparton, some fairly large declines in days on site over the last 12 months. And then we jump into views per listing. And this is driven by two things: number of people looking for properties, but also the number of properties that are available for sale. And at the moment, one of the big challenges is that lack of supply. So in Melbourne, the number of views a property is typically getting is up 45.3% year on year, although you can see that it's dropped over the last couple of months from its historic high. In regional Victoria, there's been a 78.5% rise year on year, and views per listing in regional Victoria are the highest they've ever been. And again, you can see right across the board that the regional areas have seen much larger jumps in views per listing year on year than the capital cities have. So again, let's have a look at how that breaks down across Victoria. So Mornington Peninsula getting the most views per listing. It's actually getting the second highest number of views per listing of any region in the country. The northern beaches of New South Wales is the only one that gets a higher number of views per listing. You can also see just how much those views have shot up over the last year, up 86.5% year on year. The outer east also getting a lot of views, just over 4,300 on average, and 50% growth over the past year. And again, you can see that the inner suburbs in terms of views per listing are lagging somewhat behind in terms of growth. In regional Victoria, Geelong overwhelmingly getting the highest number of views, then followed by Bendigo and Ballarat. But the biggest growth has been, probably surprisingly, Warrnambool in the southwest. Views have more than doubled over the year. They've almost doubled in Latrobe Gippsland. And even Geelong, which was already the strongest market for views a year ago, has seen an 87% increase in views per listing year on year. So let's look more specifically at some of the data we're seeing on the new home segment of the market. So as I said earlier, we're seeing record high levels of inquiry despite the fact that home builder ended. So year on year, the number of the number of inquiries for land estates has increased by 103.1%. The number of inquiries for apartments have increased by 56.2%. And you can see since June, there has been a real bounce back in that rate of growth on a year-on-year basis. But we're still seeing a lot more inquiry going towards land estate than in apartments. So 70% of overall inquiry at the moment is for land estates in Victoria, as opposed to just 30% for the apartment projects. Now, part of this is volume. We are seeing fewer projects, and particularly with apartments, the scale of the new projects that are launching is typically a lot smaller. We're not seeing too many 400 apartment projects going up. A lot of the new stock coming online now is a lot more niche, fewer than 100 apartments targeted the owner occupier. And that's really encouraging because that's responding to the changes we're seeing in the market and what people really want at the moment when they're looking for an apartment. It will be interesting to see how that changes with some investors coming back into the market at the moment. And if we do start to see a bit more demand for those, 1 and 2 bedroom apartments that have been so popular over the past decade or so. In terms of the inquiries, so here we're looking at who's inquiring. So the year-on-year change for investors is the most notable there. You can see a 270% year-on-year rise in inquiry to investors. Buyer inquiries up 38% from a year ago. First home buyers, again, somewhat surprisingly, up 22%. But if we look at the components of who's inquiring, there's a big fall away in inquiry from buyers in August. And we actually on our website changed some of the experiences around how people define themselves. And we think that might be having a bit of an impact here. There was an uptick in inquiry from first home buyers, but it's still well down on where it was at its peak. And then you can see in terms of the share of inquiry, investors are really picking up quite rapidly at the moment. So again, more evidence that investors are starting to come back into the market. I should highlight that this is inquiry just for new homes. We do have inquiry for established property, but I haven't included it in this chart pack. So where are we going from here? So we've got a historic low cash rate. There's a lot of stimulus in the market and there's really strong demand. Although that demand's kind of pulled back a little bit from its record high, it's still at a very high level. And we expect it to remain there, basically because a lot of people that are looking for properties at the moment, particularly in Victoria, simply can't buy those properties. As we know, we've had a slow vaccine rollout, and these ongoing lockdowns just really harm the confidence of the market. The uncertainty about, there's a few cases. Are we going to go into lockdown? What's going to happen? How long are we going to be locked in our houses for? That's really having a detrimental impact on people's confidence to put their properties on the market. I guess the good news is we believe that when lockdowns are over, there is a lot of pent-up demand, both in terms of people to buy, but also a lot of pent-up demand in terms of people that would have listed over the last 2 or 3 months that Melbourne's been in and out of lockdowns, and a lot of that stock will come onto the market pretty quickly. In terms of the established market, as I said, the lack of stock there is potentially going to drive more people into the new housing market simply because they can't find what they want. Rental markets, the inner city areas are still really challenged, much less demand, and they're really likely to stay that way until, firstly, at least domestic borders start opening and migration to Victoria starts happening again. But the big one will be international borders reopening. And as soon as that can happen, that's going to be better news for those inner city apartment markets. But in terms of investors, the rule of thumb used to be you needed a 5.5% gross rental yield to consider a property as an investor, particularly if you're a yield-based investor. But interest rates are so low and yields on all asset classes are so low at the moment. Now, a 4 or a 4.5% yield and some capital growth on top of that looks very attractive at the moment. I think that's why we're starting to see residential property investors coming back into the market. But overall, I think that the story is that people are still really restricted in how they can spend their money. Borrowing costs are low and they're going to stay low for a number of years. And that's going to continue to provide support for demand in the housing market. It may not be quite as strong as we saw when we came out of lockdown last year, but I expect that it's still going to be very strong. The only potential, I think, bump in the road from here is a lot of calls for the regulator to reintroduce macroprudential controls. Will we see them reintroduced? Because we do know that they can have a big impact on demand for property. That rationing of credit can really harm the markets, as we saw back in between 2016 and 2019, particularly in New South Wales and Victoria. So that's it from me. I'm going to stop sharing my screen. I'm going to pass you back to Sam, but thank you for your time.
Thank you, Cameron. Very insightful presentation. My name is Sam and I am Senior Account Partner in the Victorian Developer team at REA Group. And I'd like to welcome Ash Bramich, Sales Marketing Director at Pace Development Group, as well as Fergus Humphreys, Sales and Marketing Director at Hampton, who'll be joining us today for our Q&A section. If there are any questions that you'd like answered, feel free to share through the Q&A functionality at the bottom of your screen. And we'll endeavour to answer these. So I'll start off with you, Ash. So how have you found the market during the 6th lockdown in Victoria, and what have you been doing to engage buyers?
Thanks, Sam. Good to be a part, and thank you for the opportunity. Look, I think personally, mate, it's been a little bit tougher. I think talking to a lot of people, I think we've all had a bit of COVID fatigue in this latest lockdown. But from a professional perspective, we've certainly been a lot more prepared. I think consumers are a lot more adept and willing to buy property online if businesses know how and what and when to share the information, which is a critical component. Pace itself has seen this as an opportunity over the last 18 months to really make some significant investments in our business and how we actually engage with our buyers. We've certainly got a slicker and more responsive, content-rich website, which went live last month. We've employed a digital CRM specialist to help us understand, to make those changes. We've got to know our buyers a lot better. Helix personas have helped us do that when launching a project, understanding our demographic, but also in those that are currently on our database that we continue to engage with. Data cleansing obviously is incredibly important. Personalised comms is a significant improvement in the way we go about engaging with our buyers. Render investment, and not underestimating obviously the quality of the importance of renders and the number of renders, and just encouraging virtual appointments and tours and videos. I mean, content's been king for a long time, but the importance of video and how that actually connects with buyers has been really, really critical.
Thanks, Ash. And over to you, Ferg. So you've managed to continue making sales in lockdown. Would you like to share the secret to some of your success at Hampton?
Yeah, absolutely, Sam, and thanks for having us today. Yeah, look, I think, you know, it's like anything, you've always got to stay your course and do what you do and do it better than what you've done previously. So I think from our point of view, defining some of our success has definitely been about living our vision from the start. We defined a very large vision strategy from when we started this project, creating a neighbourhood in a park. And I think definitely during COVID, people have been or gravitated to open space. So that's really helped us generate some momentum through the lockdown. And I think in terms of success, we've really garnished that momentum. We've got 3 stages under construction at the moment. And the purchasers have now got confidence in what we're doing and what we're delivering. And I think that's really important. If you can demonstrate that what you say and what you do happens, and that you're actually delivering it during COVID, that gains a lot of respect from that audience. And I think, you know, delivering amenity is key to part of that as well. We've delivered a 5,000 square metre park during that time frame. So most importantly, maintain your advertising spend during the time, because Cameron mentioned it earlier. You know, the peaks and troughs of closures during COVID, we definitely have seen an increase in demand coming out of lockdowns. And that's when we're transacting the most of our deals. So we've actually had a really strong time. And I think, you know, consistency is key out there in the market at the moment.
Thank you for that, Ferg. And back to you, Ash. What did lockdown last year in Victoria teach you for lockdown this year?
having the right product at the right price, I suppose, is an integral part to getting to first base. So one must never underestimate that as consumers look at how they live and what they want moving forward. Buyers are doing more research than ever before contacting you. So it's just critical that to get to that first base, that you're actually in the marketplace is something that resonates and engages with what the consumer's wanting. Knowing what, how, and when to engage with them probably gets you to second base. And this is the critical thing around personalised communications in understanding that to get into, I suppose, reaching a buyer's heart as well as their mind is being able to understand firstly what's important to them and then delivering that messaging so that it actually makes a genuine connection. Removing friction points, not just technically speaking, but along that sales process and seeing it from a buyer's perspective and ensuring that the storytelling is consistency from start through to completion. Never underestimating, of course, the building of the trust and the empathy and the rapport throughout that process. And all those things will culminate, I suppose, in allowing a buyer to buy rather than you having to sell. So implementation of a few of those key things there go a long way to continuing our success here at VIC.
Thanks, Ash. And I'd love to hear both Ferg and Ash, your response as well to this next question. Obviously, there are challenges without face-to-face inspections currently. So what advice would you give people nurturing leads at this time? And perhaps we'll start off with you, Fergus.
Yeah, that's an interesting question, Sammy. I think, you know, given that we're starting to now see people, and it's only been recently in our experience, start buying properties without inspecting them, I think you're starting to see a bit of a transition in people are now getting tired or fatigued from lockdowns. They still need to go and buy property. So I think how you engage with those people and nurture those people through the buyer journey or the purchasing cycle is key. And really, it's just about defining each of those stages of a buyer journey. And you guys do it really well as to how and what technology and what things we can implement through that cycle. And I think Ash mentioned it before and reiterate all his comments about knowing your purchasers, knowing your customers, knowing what they respond to, knowing how to engage with them. There's no order taking happening now, and it's a good part of the cycle to really learn more about your customers and engage with them on a personal level. And that's really what's generating the results for us.
Thanks, Fergus. And is there anything you'd like to share on that, Ash?
From a lead nurturing perspective, you mean?
Yeah, yes.
Yeah, just you've got to get to know your buyer during this crisis. I mean, this is a unique opportunity that we have available to us to be able to make meaningful connections so that you can respond and connect in meaningful ways. So I think this is an important time. Quality over quantity. It never ceases to amaze me, you know, when on e-commerce platforms and engaging with people that I'm interested in buying things from. Not only do they not know you, but they then bombard you with information, and they bombard you with information often at times when you don't want that information, or you actually haven't even asked for that information. So content has always been king. Never underestimate the importance of obviously how video can play such an important role. Being responsive. I mean, we've all had examples and situations where we've sent inquiries for things that we've been looking to buy and found that response times have been incredibly slow. But also understanding that when you actually communicate with the buyer, understanding their personality and how they wish to be engaged with, because there are certain personalities that want a quick transaction and want to get to the point really quickly. And you can sense that in the way that often they ask questions or they communicate with you via text or email. So understanding that insight plays a really important role in then knowing how you need to craft your response, because there are other people that actually don't wish to transact quickly, and therefore staggered approach is probably more relevant. So there's some key things I think that we constantly have with our sales team in knowing what's important to the consumer, what information are they actually wanting, and how are we going to go about delivering it in a timely manner and an informative way.
Thanks, Ash and Ferg. Cam, I might throw this question to you. Will the return of immigration prolong this housing price boom? And at what point is it likely to cool off or even correct downwards? And for how long do you think that would last?
Nice, easy one there for me. Look, I think, so immigration, people don't just show up and buy a property straight away, right? They come to Australia, they often rent for a while, and then they decide, and most migrants have to buy something brand new. There are some exceptions to that, but basically we've had this 18-month hole in that pipeline where nobody's been coming into Australia. So we've still got a lot of people pre-COVID that moved to Australia and might be looking to buy a home at the current period, but there is going to be a significant gap for that 18 months. And I think, I think whilst we want, whilst a lot of people want migration levels to get back to the levels they were at pre-COVID, we keep our borders shut, the harder that's going to be, because there is a global sort of competition for this talent, and people won't wait to come to Australia forever. You know, the US is opening back up, Canada's opening back up, Europe's opening back up. Not to mention the fact that we're having some challenges with the Chinese government as well. So that might dissuade some Chinese people from migrating to Australia. So, I think that migration coming back will obviously be positive for the new home sector, but it may not be as positive as it has been in the past. In terms of prices, I think we'll continue to see price growth while there's restrictions in place. One of the reasons why prices are rising so quickly at the moment is people are spending all their time at home. It's hard enough to plan a domestic holiday, and you can't even plan an overseas holiday. Once people have a few other things to go and spend their money on, I think we will see a bit of a slowing down in the housing market. Obviously, if macroprudential policies are enacted again, that will have a cooling effect on the housing market as well. But assuming the government sticks to its plan of reopening international borders sort of mid next year, I think that's when the market will slow. In terms of prices falling, probably not anytime imminent, but certainly I think when interest rates start to rise, that's probably a signal to the market, and that would lead to a cooling down of the market, potentially some price falls as well. But again, that's probably at this stage a 2024 prospect. But I can definitely see in sort of 12, 18 months time, the rate of growth in the market is going to be significantly slower because people will be doing overseas holidays again. People will have other things to spend money on. They'll be going out to restaurants and bars and doing all those sorts of things and spending a lot less time at home.
Thanks for that, Cam. And another one for you. As ongoing new development is one of the key economic drivers of our economy, what changes need to be made in order to continue driving this growth? And is it things such as the investor stamp duty relief that was removed a few years ago?
That would be a big one. I mean, ultimately, one of the challenges at the moment, or always, is getting supply to the market and getting approvals through. There's an inquiry going on. It started today at the federal government about housing supply issues. And certainly, and I mean, ultimately, the challenge with all of this is the federal government can hold an inquiry, but it's really up to local governments to go and approve new development. And we need to find ways to make that smoother, quicker, and also cheaper for development, for developers, so that the infrastructure charges aren't so burdensome that all that cost ends up being passed on to the end user. So, and look, I'm not confident that this inquiry is going to change anything. I think it might shine a light onto some of the issues, but I don't see that there's going to be any great changes coming out of this.
Thank you, Cam. And then back to Fergus and Ash. Assuming that we're going to be able to hold face-to-face appointments in Victoria over the coming weeks, what will your advertising and marketing strategies look like over the next few months? And maybe we'll start with you, Ash.
Yeah, interesting. But there's no doubt that a lot of developers have been holding back their projects during this lockdown period. we've seen that as an opportunity to actually go off market with a couple of hours. So we've continued business as usual. Our Blackburn project's been selling incredibly well, and our Flemington project's just been launched last week and has already seen a significant inquiry and transactions occurring. But there's no doubt that there are many developers waiting to, I suppose, unleash their projects. They've been too tentative, they've been reluctant, they maybe haven't had confidence, they've maybe been guided by project marketeers to just wait and hold. But those strategies are very much influenced and dependent on whether they're actually an off-market or a retail type launch. So I think between now and Christmas, we will see a significant uplift in listings on project marketing. We will see an enormous amount of marketing be undertaken between now and Christmas. And I think the actual traditional selling period will actually probably run over Christmas, New Year as well. I don't think there will be a slowdown in December and then a kick up in late Jan and Feb. So I think we'll see probably a lot come on the market, a lot of marketing be undertaken, and I think a lot of developers, in this new normal, will look at their display suites and ensure that they're creating a COVID-friendly environment, and also continuing to run parallel with that their strong online presence for those that are maybe reluctant to either engage face-to-face and come to displays, or maybe have just accepted that e-commerce and buying property online is a very easy path now, and will continue to engage obviously as they have during COVID lockdown period. So I expect it to be a very busy 3 to 6 months ahead.
Yeah, thanks, Sammy. Yeah, pretty much concur with Ash. I mean, last year over Christmas, New Year was one of our busiest Christmases that I've had in the business. So, and that was off the back of coming out of lockdowns last year. So we see exactly the same thing happening in terms of advertising spends. We're looking at ramping up new stages of Moonee Valley Park early in the new year from a retail perspective. Essentially, I think, that's probably timing wise when a lot of others are probably looking at doing the same. But I think, between now and Christmas, there's still opportunities, whether it be off market, retail, through channels to be doing deals. So, yeah, look, we've seen some pretty strong interest across all sectors. So we'll be pushing forward with our releases early in the new year. So that's where we're at.
Thanks for that, Cam, Ash and Ferg. I am conscious of time. I can see there are a few questions that we haven't had time to answer. So we'll endeavour to respond to these as soon as possible. And I would recommend, if there are any that you'd like followed up, to contact your REA account partner, and we will be sure to action them. Thank you again to Ash, Ferg and Cam for sharing your insights today. And I'll pass back over to James, who will close out the session.
Thanks very much, Sammy, and thanks to all of our guests, Cam and Ash and Ferg. That was awesome to hear all those insights from you guys. Thanks again to all of you for your time today. And what we will do is we'll send you a copy of the recording of the webinar as well as the slides, so you can have a good look at those in detail. And they'll also be available on our development hub. A quick poll will now appear on your screen, so please tell us what you think about today's webinar session. And we will see you next time. Thanks very much.